Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Monday, March 28th, 2016. We are looking at settlement just taking place in the S&Ps, with the S&Ps closing in essence unchanged today at 2028, puts it down about 50 points. Now the Dow Jones Industrial Average did close higher today. As I said, we're going into settlement, but it looks like we'll see the Dow Jones Industrial Average close up about 20 points on the day at 17,535. So traders, as you know, last week we did get out of our long Standard & Poor's vis-a-vis the E-mini when the market came down and actually traded to these lows down here right at around 2010, and that of course is our 200-day moving average. Now, of course, we placed our stops just below 2020 at 2019, getting in at 1979, a 40-point gain. So it was an excellent trade. And the real question is, what now? And so my consensus and my sentiment right now is mixed, because the fact of the matter is we have seen some real resistance, some real headwinds come into the market at around 2043 vis-a-vis the S&P E-mini. We can see that as a 23% retracement. It's the basic retracement that we have been using, and it seems to have eloquently defined this level of resistance here. At the same time, we do need to acknowledge the fact that the low that was hit on Friday down around 2010 came precisely to, but not at or below, the 200-day moving average. And that to me is extremely bullish in terms of sentiment. So what that tells me is that we probably have a market in consolidation. And so what I mean by that is that rather than us effectively seeing this market sell off dramatically, which of course is still possible, but I think that the probability of that occurrence is remote, I think we'll see something like we saw here or here or here, where following a tremendous upside spurt, we had a couple of days of sideways action followed by another upside spurt. And as you can see, this upside spurt took us past that former resistance, which was 1937. And that was, of course, a 61% retracement of the August meltdown. And then we had yet another spurt, and you can see we get that correction right at this 2003, which of course was former resistance. And once again, it spurts above, and we've got resistance here. So I think what we're genuinely seeing is a market that is moving higher, and as it moves higher, rather than have true corrective waves, we're getting these tight levels of consolidation. And that is what will tend to happen in a market that has an extremely strong upside bias. So traders, obviously the real question is whether or not this market will continue its consolidation, and if in fact it is truly just a period of consolidation, what will we need to see for a liftoff? Now, we have a lot of economic data which is coming out this week, jobs report at the end of the week. We have Yellen speaking tomorrow, although I think that all we'll probably get is clarification of what she said last week, but anything is possible. But as long as we remain above this 200-day moving average and don't break substantially into that, traders, I think that we're going to look for proper placement to enter this market from the long side with another S&P 500 trade. And so traders, lastly, I do want to take a look at crude oil. Crude oil today is trading ever so slightly under $40 per barrel. If you recall, that was really the price point that I had stated that I believe we would see real resistance. I was under the impression that that would pretty much be the top of the market as we saw this rally coming up from about 26. Now, it did make it as high as 42. You can see that right here, but you can also see this. These are weekly candlesticks, but you can also see that on these weekly candlesticks, we never had a close above $40. So the question is, if we see this market retrace, will that affect the equities markets in the way that they have in the past? And my belief is that as long as we're staying within a price guideline between, say, $40 a barrel and maybe $34 a barrel, I don't think we're going to see that same effect as we saw as this market was under tremendous pressure, tremendous pressure at the beginning of this year and the end of last year. So we'll have to see how this market wants to unfold, meaning the equities this week. Keep a close eye on the oil market, and everything being equal and everything remaining constant, meaning nothing really new fundamentally coming into the market, look for a place to position ourselves from the long side. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.